Good morning, everybody. Hope everyone's doing well. Let's go see what we got going on here. Wait a minute. But yeah, so currently what we see, I started the week trying to see if we could get the DXY to want to run higher, possibly reach into the volume imbalance here. Because this was a market maker sell model and that market maker sell model completed, market maker buy and sell models, when they complete, pretty much create balanced price ranges. So if it does decide to leave these areas and just continue to tank for whatever reason that we may not be aware of in terms of the economy or whatnot, so be it. But I would prefer to see us run higher, as I've been talking about since Sunday. Maybe tap into this area, then look to want to run to the sell side again, and maybe target these daily lows, and maybe even further eco lows, like all the way down here and whatnot. But obviously we'll see if that wants to transpire. So far it's been a high resistance environment. We have been pretty much doing not doing much, pretty much. It's kind of just been consolidating. It's even more apparent when we go to this time frame. I mean, you could clearly see that we're kind of stuck, right? Like large ranges have now led to small ranges. And it's pretty likely, given the fact that we took out the low, the significant higher time frame lows, we hit a higher time frame fair value gap. It's pretty logical to think that they're going to potentially want to seek internal range in some capacity. External range was taken, so now internal range may get looked at, position the opposing delivery. Then once they achieve some type of, in this case, premium array, I would like to see obviously the volume imbalance. Maybe it doesn't have to do that. We do have this little gap in here that has no wicks or anything through it, so maybe it reaches for that and leaves the daily volume imbalance. I wouldn't be surprised if that takes place, but I'm not bullish on the DXY. I'm also not bullish overall just yet for the indices, because that's not been what's been proven. I've been still looking to see if we could go lower. Yesterday in my private community, I talked about how we were going to navigate this. We did talk about the gap here potentially being filled. I wanted to see initially on the call yesterday with my private community, I wanted to see if we could get price to run maybe above this, maybe peak above it, spend little time there, then start to decline. But it has pretty much not done that, right? Across the board, we've just kind of been overlapping, consolidating. So, it's been a high resistance environment. I had a couple students engage some of the ideas we talked about yesterday, but I personally talked about how it was a no trade day for me. I called a couple of things out. Some stuff did work out. I personally hesitated. Then we called out a couple of different other opportunities to try to take short-term buys, trying to attempt to see price get back above these the highs up here. But that was all under the umbrella of us looking to go higher to go lower, because we're still in a downtrend until something like this high gets taken. This was all manipulation, right? This was all from Trump saying buy. So, at the same time, it's not going to be surprising if they look to demolish all this, and then on the other side of the coin, see DXY want to rally up to the level up here. That's been my assumption, that basically what we've been going into this week looking for. Again, small ranges lead to large ranges, but large ranges lead to small ranges. That's very, very clear in terms of that characteristic currently in price delivery. We see a huge decline on the DXY, which has now led to sell side taken, and now it's stuck looking like it does want to run up and target some type of buy side. In this case, I'd be looking at the high and this little gap in here, and then if it was going to blow through that max, I'd like to see it get up into this level. But if it was to run all the way through these levels up here, the buy side delivery, sell side delivery here, the low should act as a balanced price range. So all this should not need to get traded into, on top of the fact that we have this market maker sell model on that large daily, weekly time frame, right? So lots of reasons why price, unless it's going to totally turn around, there's lots of reasons why buys would be very temporary, and the ability for price to want to stay below like this low, right, in some of these areas. There's a pretty strong argument for that perspective. And of course, if that changes, we're able to then adjust and make our own changes. But we'll see. We'll see when the time comes if that's going to be the case, right? So yeah. So let me look at the chat. Hey, besides all this DXY inside 12-month, what you got? Yeah, so COT at the current moment, mind you, COT is a very laggy indicator. I have been seeing that same thing, them offloading their short positions in terms of the signature between the open interest and the COT line. I have been seeing that, but we have to always remind ourselves when it comes to fundamental analysis like that it's a super laggy indicator. They could show bullish signature in COT, but if it doesn't show up technically in the price action for the asset you're trading, if it's not like building that narrative, which it may at this current moment for some of the indices, but until we get further evidence, again, it could be a very laggy indicator, especially with the dark cloud of status of the economy based on the fact that deals need to be made and lots of uncertainty floating around that topic. With that being present, I mean, it's just even more important to always remember that unless the technicals align with whatever the COT is showing us, it's not useful until it does something like that, until it all converges together. Otherwise, big pockets in the market can just keep drowning the market. A lot of this is manipulated because a lot of the political echelon in the United States doesn't like Trump, which is unfortunate. People are actually being hurt by the things that are taking place, and those things don't have to take place because a lot of this stuff is good for the economy at the end of the day. Just it is what it is. But yeah, keeping all that stuff in mind, it's super important when you're using things like COT. ICT's mentioned this, but COT is a laggy indicator because it just shows you a particular view as far as what smart money could or what they could be doing versus another thing. And you said there's a COT signature showing bullishness. I agree. Me and my private community have mentioned that. But again, it's a super laggy indicator, and what we've been waiting for is, obviously we want to time the rebound because it's going to rebound at some point. But in order for us to attach that rebound characteristic to COT, we have to see it formulating in the chart, in this case for the indices, because that's what we trade, obviously, right? But that's a good observation, Mex. So yeah, you're pretty much in line with that. SMT with the euro. Let me go check that real quick. So yeah, we had SMT at the lows here. That's in part what led to this run higher. We also had a balanced price range. I mentioned that if we would have closed below this, both live on YouTube and in my private community, that would have triggered me into thinking that, okay, sell side's probably going to be more meaningful. Because that didn't happen, because we got back above these levels, price ended up pushing. So yeah, and then of course we had this pretty strong change and very strong manipulation that's taken place as well, and a continued rally. So I wouldn't be surprised if we do see that things like the euro look to retrace and maybe reach down here, especially if we see what I just mentioned occur in the DXY. If that takes place, like this rallies up to the fair value gap up here or the volume imbalance, which again is logical because external range has been clearly violated aggressively and it's having a bit of a hard time trying to break through that. So it's making me feel like, there's a potential for price to want to give this retracement. There's also a failure swing here inside this higher time frame fair value gap. I'll let you go dig into that and figure out where that, like what that actually is, so you can go get your hands dirty a little bit. But we see this failure swing here between the DXY. We come over here to the GBP and the Euro, and we see that there's also an SMT here as well. GBP blew out the highs. Euro kind of, it's made a failure swing. Let's see exactly what day this is. April 11th. Let's drag that over to here. April 11th. So yeah, the SMT between the Euro, GBP, and the DXY is there. It's a bearish SMT. But again, that makes sense, right? It's taking external range liquidity here too. Excuse me. And it's been super aggressive, so it's not unreasonable to think that this is going to want to drop. This idea is in part kind of assisting us with the Nasdaq assumption that it's potentially going to seek sell side still. It was in part why I was trying to look for price to want to run above these buy side pool liquidity pools and observe how it was going to behave up there. And then if it was to displace and get down below this fair value gap, my eyes obviously would go to these layered trendline liquidity pools down here, in line with the higher time frame downside narrative. Yeah, MEX COT as an extra. Yeah, exactly. That's exactly the perspective. Anyone that uses COT, look at what MEXC just said. It's an extra added confirmation. I have a lot of students that I teach COT to, and they try to use it as a be-all, end-all. ICT himself has mentioned that's not a good choice. So it's just an added layer to whatever it is that you're trying to see in price. And the technicals have to be converging with what you see on the fundamentals. Otherwise, you can get fooled, and it may go against you longer than you realize before it makes a run finally in the right direction that you're looking for. I'm expecting to go with low. Short run to the monthly bearish fair value gap. Monthly bearish fair value gap on which asset are you talking about? Mexi, if you could mention which asset you want to see. Okay, the DXY. Let's go run back over there again. Monthly bearish fair value gap. Yeah, let's go to the monthly real quick. So monthly bearish fair value gap. Not sure exactly where on the monthly you're mentioning to the monthly bearish fair value gap. Yeah, SMT can also be looked at as an extra confirmation as well. You kind of want to see SMT taking place with intermarket relationships correlating and supporting whatever the SMT you're looking at should be delivering. And then also you want to find SMT at higher time frame PD arrays, because SMT can help you see smart money's making moves at that particular level. And then if you can also add intermarket relationships to that, add the fact that it hit a higher time frame PD array on a specific day of the week. And then of course, if you add COT and these different things and you're looking at it from the higher time frame, obviously SMT becomes a whole lot more meaningful. And if you have two SMTs, this has been happening a lot also. If you have two SMTs present at any moment, what you do or what you use to confirm which one should be more likely, first of all, you need to look at the higher time frame, right? What is it doing specifically? But then again, if you have two SMTs at the same time, whether on the lower time frame or the higher time frame, say you're trading the Nasdaq, you want to then go to the DXY and the bond and yields market to confirm whatever those things are saying, so then you can justify which SMT should or should not be more likely to take place. All right, does that make sense? I hope that's clear. A very easy way to kind of filter SMT and deal with that scenario. And of course, if you're in consolidation, you're going to see SMT everywhere. Okay, and so you just want to at that moment go revert yourself back to what the higher time frame is doing. Okay. So yeah, so we could see also how the DXY has broke through this monthly fair value gap. and we have definitely blown out these lows here. So again, these higher time frame lows being taken is the reason why I started this week saying that if I'm going to continue to see price go lower, I would really, really, really like to see price retrace up a bit, come back into that daily fair value gap, the weekly candles range here, push a little bit more into the low, and then, maybe even get up into as far as the daily volume imbalance. Then I would like to see price look to want to start to attack sell side further. If we look at this monthly chart, you can also make the argument that this low here to this high, breaking through the low, that's technically a bearish breaker on this monthly chart. So if we end up seeing a really strong protracted move, which we may or may not see, look at all the years that since 2023, the huge consolidation, prices had a very hard time breaking through, and going anywhere. It's just been kind of back and forth because of the uncertainty in the US dollar. But yeah, that's just another added layer as far as why I do believe that DXY is still bearish until proven otherwise. What proves otherwise? Price rampaging through to the buy side, breaking through 3 PD arrays, right? And I'll let you look around and make that gauge as far as which PD arrays are what. So yeah, then we have this fair value gap here too. So there's a lot of reasons why, given what we've seen so far, should continue to take place, versus trying to think, oh, I'm going to pick a bottom, because most people are going to try to do that, and they're going to quickly find out that that is a very idiotic thing to try to do, when you could just go with the overall rampaging, larger time frame move and direction. So yeah, if we look at the bonds, we've had a retracement. Price came back into a bearish breaker here. Oh, whoops. Bearish breaker. We also have the inversion weekly fair value gap. It's also respecting that. So we also have a low down here, right? Relative equal lows. And then, of course, we have this further monthly low. Let's see which one is that. That's from 2023 in October. We have a retracement in here. The only way that I'll look for the bonds to want to go higher is if we get back above this weekly fair value gap, and then if we violate this bearish breaker I have outlined, which is also a large down wick overlapping a big down candle, right? So those are the things that, in my opinion, if they get violated, we're going to probably see a more interested price delivery to the buy side. Okay, but if not, we're going to continue to see this push lower. That's going to apply pressure, right? Or promote more interest in the indices continuing to short. So that's just even more back-end information as far as why I'm still favoring shorts, even though we saw this huge run to the buy side. And then again, if we violate these highs up here, if it just starts rampaging up there and then just closing above, looks like it wants to attack the buy side up here, then obviously we're going to have to make some adjustments and maybe frame an argument for price to want to get up into deeper buy side. Maybe this will have turned into the rebounding we've been kind of trying to anticipate if it was to arise. It'd be more logical, or not logical, but more convincing if we had an SMT at the lows here on the higher time frame between the 3 indices. We didn't have that, so that is a concern. It's, again, I want to see more evidence for me to want to switch from a extremely bearish, uncertain, fearful market delivery to a bullish, rebounded market delivery. Again, especially because we have all this gray area, a gray cloud floating above us when it comes to tariffs, the deals that are in the process of being made. Whatever happens with that is going to obviously have a very strong impact on U.S. companies and whether they can make profits or not. And that also kind of mess with the consumer, whether they're purchasing things as they should be or not, or as they normally do, or if it drops in consumer sentiment. Right. So yeah. So those are some back end in the weeds type of pieces of information. But yeah, so again, if we could see price get below this new week opening gap, if it could continue to leave this high available and we get a displacement, We could then start to identify fair value gaps that are being overlapped, and then of course start to aim for deeper sell side if obviously that's going to continue to be supported. But again, how price delivers here, whether it breaks through the highs and starts really rampaging, and how it breaks above the highs is going to be extremely important to watch. We have a new day opening gap from last week up here. I believe if we drop down a bit, we can go try to find a new day opening gap from overnight. Some little bucks. All right. So we could see that there's not even really a new day opening gap in here. It's not really much. So that is definitely interesting. I do have an issue with the fact that they left these equal highs like this. I really didn't like that yesterday. That's what kind of kept me on the sidelines. We did talk about this drop, filling in the rest of the new week opening gap. One of my students took a trade in here, bagged 60 points. We ended up calling, buys and sells. But again, we had a very strong, deep conversation acknowledging the high resistance delivery, right? Price ended up being low resistance to get down here, but then simply chopped back and forth and has continued to do so. So something else we could look at, since there's no new day opening gap, we can kind of look at this here. We should watch how that behaves. That may be something impactful. It has delivered buy side and sell side. So again, if it just starts to violate levels like this and gets above them, using them as support, we could then potentially start to make arguments for price to go higher if things fall in line with that in terms of the other assets too, when the time comes. For now, again, we started the week and we'll continue to march through the week favoring bearishness if this is what we're going to continue to see. Okay, especially if we have the likelihood for DXY to want to continue to try and retrace, because obviously that supports the downtrend, and that should also, in the same moment, potentially have the currencies here have the interest to want to go lower as well, at least in a short-term capacity. The GBP doesn't look like it's favoring any type of downside. Neither is the euro, right? That's all obviously a product of the DXY tanking. Why is the DXY and the Nasdaq and other indices falling together? Because the economic news that's taking place on the back end, the financial adjustments in the U.S. economy, it's obviously having a huge impact across the board. So there's a ton of manipulation. We're in a heavily manipulated environment, heavily volatile environment, and uncertain environment. So that's why some of the correlation effects are kind of being impacted. That's why some fundamental analysis is going to be rendered kind of useless, at least until things clear up a bit. It doesn't mean that, the times that, when you look at fundamentals or use certain tools, if they don't look like they're being respected, that doesn't mean the tools don't work. So I don't want you guys, it's a very common thing with COT and seasonality and some other like intramarket relationships and whatnot. When things aren't perfectly aligning 24/7, the new students that don't have years of experience applying these concepts jump to the conclusion that, oh, this is not a useful tool for me to apply. Then they never touch it again. Same with SMT. SMT didn't work this time, so I'm not going to use it anymore. It's not useful, and then they just disregard it because a couple of times they've seen that it wasn't working. This isn't going to be a be-all, end-all for any of these tools. But, it's telling you valuable information when things aren't correlated, when things are looking like they're kind of cracked and not really following what they're supposed to follow. What is it helping you with? It's helping you determine the conditions. What is that useful for? That's useful when you're looking to calibrate your risk, because not every moment is let me go in with my normal leverage type of moment. Not every trade is created equal. Not every condition is equal. So you got to keep these things in mind and don't discount the concept and make it so you don't use it again just because maybe a couple times throughout the year things aren't in alignment. Like the cracking correlation between the bonds and the indices has been a concern for many of my students as of recently, because obviously that's one of the main things that I use, intermarket relationships, and trying to really press into these things to come to terms with like a trustworthy narrative identification, right? But the thing is, when things aren't in alignment like that, that's telling me something useful. So I lower my risk, and my students also are permitted to lower their risk. This ain't financial advice, obviously, and I'm not a financial advisor. This is all it's helpful information, as you build experience and see the cracks in correlation, how price behaves, and then see good environments when everything is kicking, blowing on full all cylinders, and we're back into fun, clean environments. So yeah, sometimes they're going to be cracked, but when things aren't looking perfect, right? It helps you gauge your risk properly, lower your risk. It helps you see that we're in a more crazy condition. Like bullets are flying, right? If you want a better analogy, right? It's like being in war, right? If bullets are flying, you're probably going to want to do your best to try to mitigate the risk and how exposed you are, versus when there's no gunfire and you're like the one there, pushing the issue. It's very, very similar. So yeah, but it doesn't mean you just don't study these things because they're not fully in alignment right now. Those are really strong moments for you to go in and study, because you have to have both sides of the coin, and then over time you gain experience applying it. You'll see how these types of situations are helpful on both spectrums, whether it's things aren't in alignment, what that benefits you, and then obviously when they are in alignment, and what that helps you with as well. So yeah, Ski Mark said, when you have a breakaway gap and it's traded to, does that invalidate it? It invalidates it as a breakaway gap, that's for sure. Because if it's a breakaway gap, obviously it should be breaking away, right? Sometimes they're very temporary, depending on the conditions. But if you see a breakaway gap and it trades back into it, that makes that specific area not a breakaway gap anymore. Okay? So yeah, it may potentially invalidate it. Obviously, there's many things that layer on top of an invalidated particular trade idea. You don't just use a breakaway gap to confirm anything. There has to be layered confirmation. But that's definitely one element, and you're in the right headspace thinking in that way. That if it is a breakaway gap you see, and then it trades back into it, obviously it ends up not being a breakaway gap. So you got to reevaluate. Mark DeLeon told that 20 students fundamentals are currently out of the window right now. Yeah, exactly. It's like season. Yes, that right there is a perfect statement. I'm glad that Mark DeLeon. Are you in one of my communities? It's just like the season. Sometimes we get pumpkin spice coffee. Wait, Mark. Wait, Bullfrog? Oh, nice. Okay. Yeah, I was trying to piece those two together. But yeah, that's for sure. That's 100% true. It's very, very important. I've gotten a lot of questions about that. I've seen some people mention that as well in our private community. So I just wanted to make sure that even this community could realize that. Nice. But yeah, welcome. I love having my private community students hop on. We're live every single day, obviously, pretty much for the most part. But it's good to have you guys on these calls, because you guys are freaking assets. The whole private community is just amazing, and I appreciate you guys bringing what you bring to the table. It's amazing. Maddie. So Mark Frog. The frog named Mark. Shoot. But yeah, so anyways, I hope all that stuff that we talked about makes sense. Of course, again, we are in a high risk, highly volatile, uncertain market. So expect the unexpected to take place. Expect being wrong. Expect precision to not fully be there 24 hours a day. Expect to not take trades when things aren't in alignment, because this is an environment where there's intentional foolery going on to really hurt you. And you don't want to be a victim of that, especially if you know that I'm telling you this, and I'm telling you, be careful, don't overtrade and over leverage ever, but more importantly, don't ever do that now, also in these conditions, because you're going to have to face either the pain of discipline or pain of regret. Pain of discipline will get you in the right direction. Pain of regret will extend the period of time it takes for you to be successful or even make any progress. So prefer to miss a move rather than chase a move. Okay, because guess what? Those of you that have been here over and over and over, you see what we do continuously. It's very obvious that pretty much every time we're on a call, there's something that we identify as a potential opportunity. It just depends if it lines up with you. If it doesn't align with you, this is why I don't favor signals, and just providing signals, because it's like, I could do that and probably do a whole lot with that, make that grow tremendously, because we call some amazing trades over and over and over again live, and it's been proven for 3+ years at this point. But that doesn't help people. My point is to help people. And signals, you've never seen a person take signals only and become rich. It's just, there's a reason for that. Okay, it's not helpful. It's maybe good for muscle memory, but if you don't trade the same model as the mentor, what are you really doing? You're just like putting your faith and success ability in someone else's hand, and you're not learning anything. You're wasting time when you could be drilling down the skill set, getting around people like us, and listening to people like ICT and anyone that proves they know what the hell's going on, so you could learn rather than trying to be a signal junkie. Drug addicts can't be profitable for the most part. There's exceptions, but also, junkies taking signals also have a very hard time trying to be successful as well, because it's pretty much impossible. Okay. Maybe there's some exceptions to the rule, but most of the time, long term, that's a very bad decision. And wouldn't you rather be able to do it on your own? Do you really want to be subservient to somebody? Put your ability to be successful or to feed your family in someone else's hands because maybe you're being too lazy or something to go and study or put in the work. Anything that you care about, you should be willing to put in the work. You should be able to make the sacrifices no matter what it is. And I mean that, no matter what it is, whether that's to have to change a job to fix your schedule. It goes back to how badly do you want this to work? Because this is going to force you to make sacrifices in some way. It's going to force you to do things that you're going to be uncomfortable with. But at the same time, the reward is worth the risk. And it's, anything good and anything worthwhile takes time. Overnight successes also have years and years and years of practice, unless you win the lottery. Okay. Other than that, or go viral for some random reason. But other than that, these overnight successes you see take time. And most of the time they take time that most aren't willing to put into whatever it is that they're trying to be an overnight success in. Again, this is a reality channel. Okay, I'm not here to blow smoke up your ass. I'm not here to say things that you want to hear. Okay, there's going to be times when that's taking place, obviously, but most of the time it's going to be things that you need to hear. And that's sometimes unpopular, but I'm not really concerned about popularity. I'm concerned with helping and mitigating the damage and heartache that some people face as traders, because I love this industry and the people involved. I've met some of my best friends on the internet, which is kind of insane to think about. I never thought it would be that way. But the caliber of people that you come across when you try to attract those that are actually serious, it's unbelievable. It really is. And I'm grateful for the opportunity. I'm grateful for, people like you guys. Mark, why you got two accounts on right now, dude? That's solid. Keep both of them on, yo. Oh man. But yeah, again, thank you guys for hopping on. But yeah, so I hope everything makes sense so far. Let's continue to observe to see if the bonds are going to continue to use this as a reason to drop. The wick here in that same area, it's also not only a down wick that should act as resistance, but it's also a bearish breaker. So the midpoint of this breaker should hold, but ideally we are going to stay below this weekly fair value gap midpoint, which seems to have been the case so far. There's no SMT or anything, so I mean, I could be wrong about that. There's these lows here, but I'm not sure. We'd have to see more evidence to solidify that as a proper SMT. Otherwise, again, this is a huge candle. It seems as though we're going to drop. What would validate this is if price violates these upper areas, like I mentioned, and starts to rampage higher. Then and only then will we start to consider making adjustments. So for now, I want to see this drop continuously. Maybe it stalls out because it's been so aggressive recently. Maybe they wait for the Fed speech coming out on Wednesday, tomorrow, during the PM session. Maybe they pause and wait and stick around for that, building liquidity on both sides. We'll obviously have to see. So yeah, we'll keep that in mind. And that's in part why we've seen such a high resistance environment. Aside from the other fundamental sentiment indicators, that being the deals that are being made, like I mentioned earlier, and the uncertainty surrounding that topic with tariffs and how that's going to impact the economy and business and consumers and whatever. So all of that is leading us to this environment, right? We're not just consolidating just because we're consolidating. There's reasons why things take place. And, what I just mentioned is, at least in my opinion, why prices kind of stalled out here. All right, so we'll see if we can get some type of excitement. But again, if we continue to get the same crap that we had yesterday, today, then obviously we're going to have the same mentality that we had yesterday. Okay, then that's half risk, one trade attempt maximum, and be very demanding. Like yesterday, I was so demanding that one of the buy side liquidity pools were going to be violated to the point where it didn't do that going up to the open, and then it just delivered quickly, and I just refused to get in because I've seen this happen one too many times, where price will set equal highs, aggressively reprice down, maybe below the previous day's open, or below previous day, or below London's low, whipsaw back up, especially ahead of a news event, take out some form of buy side that was left just like this, then it continues to go. I've seen that one too many times. So based on the mistakes I've made in regards to that issue, I place rules around it. What are those rules? I never buy or sell when there's equal highs for a short or right next to a short that haven't been violated, and I never buy where there's equal lows that were left for a buy that takes place. I miss moves because of this particular rule. And guess what my response is to the fact that I'm missing moves? I don't care. Okay, and you shouldn't either, because there's always something to do. And the intel that we've got from yesterday is very valuable because we still have equal highs. It's still respecting the new week opening gap here. So we'll see, right? We'll see what happens as a result of this. Again, I would prefer to see DXY give us a little bit strong, like a kind of a strong response back above this weekly open. Maybe, again, we don't get that because, again, I mentioned that I think it's a weekly breaker, or let me see. It's a monthly breaker, right? So this low, let me actually mark that off as a monthly breaker. I think that's important. So if that's a breaker, again, like I just mentioned, this is a good idea here, a good piece of information, good little example. When a breaker forms, that's creating a balanced price range. Okay, when a market maker sell model, in this case, completes, the low up to the high, right? All that price delivery is a balanced price range. So if it's going to continue, it should have little to no interest to try to come back up into there if it's going to continue in any strong capacity, in this case to the downside. Okay, that's a very powerful piece of information that may go over some of your heads, but you know, it'll be more valuable to you as you continue to hop on and you know, spend time with us. So yeah, that's in part why I don't think there's going to be some huge crazy retracement, and why I think this weekly fair value gap in here, this inversion fair value gap, should act as a pretty powerful level of resistance. Same with this low, these consecutive up candles. And then before that, we have the fair value gap here, the volume imbalance, and then a little bit deeper portion of that gap. But again, if it does not retrace at all and just continues to melt down, this is why, the things that I'm talking about here. Okay, and that's a high probability of doing that. Again, I'd prefer to see us come up into here so we could set up visually and logically the opposing view. But maybe it's, you know, more interested in just taking off. And then, of course, if this takes place and we see the indices rebound to the buy side, you know, we may start to be able to build a narrative for price to want to run higher. But again, we're very demanding when it comes to narrative changes. Bias changes day to day, and we're flexible in that regard. But for the most part, higher time frame narrative, again, it takes a long time to change. Why? Because we're looking for price action to change on a higher time frame. We're looking for our invalidation principles to take place on the higher time frame, because higher time frame's king. And if that doesn't change, right, if levels on the higher time frame don't get violated, the lower time frame is going to be subservient to what that higher time frame is doing. So if we're in a bearish trend, but the 15-minute chart is showing that it's bullish, it's most likely a retracement inside that higher time frame. And if you're just stuck on the 1 hour or the 1 minute, you're going to get fooled, and then you're going to get burned. And you know, maybe you were bearish overall, but you saw the 1 hour was rallying, and that 1 hour made you somehow change your view on what the higher time frame is doing. You know, you'll pay the price for that type of mistake. So that's why I talk about the things I talk about. All right, so yeah. So we're going to continue to see how this behaves here. We do have buy side left available up here. If we kind of zoom out and go get a feel for some of the price delivery up here, I would like to see this act as an intermediate term high. I'd like to potentially anticipate another failure to get above these highs. Obviously, we'll see what happens going into the open. We're inside this macro, the first macro, 550. And you can see how price is kind of, you know, running higher a bit. Let's see, we got SMT. I think we do have a slight SMT. Actually see. Just got some buy side here. So again, I want to see reasons to short still, because higher time frame wise, it seems like that's what's still in play. It has not changed. Okay? We don't pick a bottom and we don't pick tops. We hold the narrative, like ICT has said, until the higher time frame proves otherwise. What proves otherwise? Right? That we've shifted from one narrative to the next. Higher time frame levels being taken. Which one specifically? 3 PD arrays to the buy side. In this case, 3 PD arrays to the sell side. If we're looking to buy, and you know, it's going to fail, right? 3 PD arrays get violated to the downside on the higher time frame, invalidates the buy side delivery. 3 PD arrays to the buy side getting violated on the higher time frame invalidates a short, okay, or a sell side narrative, okay, on that higher time frame. It's the same thing too if you're on the lower time frame and you're taking an entry. Your idea for entry is potentially invalidated if 3 PD arrays are violated opposed to whatever stop you have. Or you could just have a static stop, you know, 20, 30 points. But again, you want to keep these things in mind on the back end too, so you're not just winging it, okay, just randomly taking entries and placing random stops. It shouldn't be random, because the market's not random, you know. So yeah, we got this large wick here on the Dow. I don't trade the Dow, but let's just keep this up there. Continue to monitor how that behaves. Got a fair value gap in here. We got a fair value gap up here. If we do run up and violate the high up here, and we get above this, I mean, that puts this somewhat in the crosshairs, depending on what happens around that time. Again, we're approaching the open, so things can change. There is still a possible chance for price to want to run above these highs, position themselves above there. It is Tuesday, so there's still a chance for a high of the week to form if we are going to continue to be bearish, assuming that we eventually can see DXY rally against the downside delivery, just in terms of a retracement capacity. And then of course, if that changes and just really starts to rampage, that would still be good for the indices to continue to go lower. But we'll see, right? Keep in mind what I mentioned about the DXY. If it's going to continue to fall, my line in the sand is up here. Okay, we have this breaker candle, we have a volume imbalance, we have a fair value gap. And then we also have the inversion fair value gap here, and we have a down wick. And, this buy side, sell side delivery, right? The range, midpoint of that, those are all levels that, if violated, start to invalidate the fact that DXY is going to look more long-term bearish. That starts to frame the narrative for price to now change the state of delivery. And then once we get up above this high, the delivery has officially completely changed. So yeah. Again, it takes a lot to change the narrative, because if you don't look at it that way, because that's just reality in the first place, but if you don't look at it that way, it's very easy to get caught off guard and be on a lower time frame, make an assumption, but that assumption is inside of a higher time frame retracement, right? So, and it maybe it contradicts, and then you end up taking losses unnecessarily when you could have just stuck to the narrative and went with the waves, right, where the ocean's moving. In this case, it's to the downside for the time being. But again, we took out external range liquidity. It's not unreasonable for them to want to try to seek some internal. So that's what I'm looking for. That would promote indices giving us at least one more attempt to go lower. And then depending on how the DXY wants to behave in that regard, obviously that'll determine what could happen in the future potentially. Okay, so yeah, and then again, we still see the bonds looking like they want to continue to decline. That favors downside in the excuse me. That favors downside in the indices and in the foreign currencies. If this continues and the S&P here continues between the DXY lows and the currency's highs, and then we get like a strong retracement, it's logical to think we took external range here, just like DXY took external, but to the downside. And, we're looking for this to retrace to the buy side. It looks like that same phenomenon could be very well taking place here in the euro. Now, does this drop mean that we're going to short long-term for the euro or the GBP? No. It's a higher time frame retracement profile. That's what we're inside of right now. Right, and then however price behaves down here, how it treats some of these lower areas, lower PD arrays, fair value gaps, new week opening gap, potentially some of these gaps, like maybe this one, it's inversion, and then of course we've got the highs here too, how it treats that. Depending on the delivery there, obviously it would determine whether price is going to, maybe give a strong response away, or maybe it just starts overlapping all these fair value gaps and then looks to try to blow this low out. In that case, these fair value gaps getting overlapped aggressively with aggressive down candles would turn these potentially into balanced price ranges, which then, if they prove as resistant, pushing price lower, would move our attention to targeting the lows. Now, that's a contingency plan for this buy side being invalidated. Okay. Otherwise, again, I'm just looking for this drop to be short-term in nature. We have a fractal high here, so that's also promoting the idea that the next 1 or 2 days after this candle was formed, it promotes the idea that this is, in fact, ready to retrace. Because when you have a fractal high forming on a higher time frame like this, like the daily chart, the next 2 candles after that generally can promote it's time for a retracement. Okay, and in this case, we could very well see that. And if that takes place, taking a screenshot of this, noting that down, and then seeing how things transpire, whether it supports the retracement to rally or if it just reverses entirely, that's a very powerful like flashcard you could have, or just like piece of information to continuously study, of like a rolling back tested study of that, and forward testing as well. So yeah, keep that in mind. Again, we have this wick here overlapping this fair value gap. So my max decline here, given the fact that there's a buy side and sell side delivery here, with this wick overlapped with this fair value gap, the max retracement I would like to see is up into this level, because generally when the wicks like this overlap a gap, it doesn't have to, or is uninterested in, price getting down into that level, because it's already offered both sides. And if we're in a strong bullish trend, that phenomenon should absolutely take place, and we should be able to be confident in that. And if you forward test what I just mentioned to you, I'm not going to go much deeper than that, but if you forward test what I just talked about, you'll see that this phenomenon is incredibly powerful. So yeah, definitely keep that in mind. Little gem right there about wicks and overlapping fair value gaps. Okay, so that is my view for what we see in the currencies, and I'm going to continue to ride that until proven otherwise. Still bullish overall narrative wise, but bias is different than narrative, right? So bullish narrative, bias today is a retracement to set up potential further buy side delivery in the buy side narrative, unless multiple PD arrays down here prove that they're not going to hold price anymore. Okay, so that is my assumption here, also layered with a fractal high. Possibility for this to retrace also in the same coin, right? It's just going to do the opposite. Still a bearish narrative, bullish bias to aim for something up here, and then so we could see if it's going to continue to frame further downside delivery. We want to see price go against the narrative first, then kick back in line as the week progresses. All right, so when you start the week, every week, for the most part, it's not perfect 100% all the time though, but every time you start a week, you for surely want to think the opposing side, in this case it's bearish, you want to think about the first couple days being a consolidation, manipulation phase going against, in this case, the downside. So what is that for today or for this week? We're in a bearish narrative. We'd like to see the bias for yesterday and today potentially want to rally against that. And then whatever happens inside this, we would assume that, that's going to just potentially set up further downside delivery, because nothing's changed. The narrative hasn't changed. So what does that mean? We're going to stick to that. Okay. We're not flip-floppers. We trust the long-term higher time frame narrative, and we root our opinions based on that school of thought. Okay. And it will serve you well, I promise. Maybe it doesn't seem like it now, but go and back test, forward test, hop on these calls continuously, and you'll see the stuff is somewhat simple, but extremely powerful. It's not always about the next shiny object. Doesn't matter about how much you know in terms of the concepts. It matters what you know, and how you're going to utilize what you know, whether it resonates with you, and if you could see it, and if you have different elements that are mandatory in alignment, right? Like risk and bias and narrative process and targeting and what's your entry model, and a couple other topics I have. You can go reference some of the non-negotiable topics I talk about in the free Discord. So maybe it can be a little companion to you when you're studying, so that you can kind of organize your plans and how you're learning, because it's hard bouncing around and having such a vast amount of topics, and then not really having much of a structure to it. So the little list that I give everybody kind of helps you with that. So definitely go check that out. Right. So yeah, I hope my opinion so far, as far as what I want to see the market do, going into this open. I hope it makes sense. I would prefer to see this high stay intact. I'm going to classify this as an intermediate term high. I like the fact that we had a failure swing here. I like the fact that we have the layered liquidity here and the higher time frame is still bullish. Still bearish. Sorry about that. I like the fact that we have relative equal lows down here in line with that. I like the fact that DXY looks like it has a pretty decent likelihood of giving a potential retracement to these levels I mentioned. I like the fact that the euro is also supporting that retracement in the bullish narrative idea. Clearly, you could see that that's unfolding. And then obviously, however it delivers inside this, right? If we do start getting a delivery into this area, line in the sand is down here. But if it delivers in here and then pushes away aggressively, like continuing the bullish narrative, then obviously we're still in a healthy buy side delivery. And of course, that'll be supported if we rally up here, hit these levels, fair value gap or the volume imbalance, and then start to push lower. That should also assist us in seeing this drop as well. This here, I believe, is a previous day's low. Let me actually pull this one up here to more recent liquidity. Right, so if you take the range currently, the current weekly range, go from this high to that low, you can get a pretty clear picture as far as where price is at inside this range. Equilibrium's right here. Notice how it's hung around. Hasn't really done much at all. Obviously, there's a lot of news ahead of us. There's a lot of uncertainty in the market. So all of that mixed with this as well, the fact that we're just hanging around in a consolidation, also navigating, bouncing back and forth between a equilibrium point within the current range, all of that is indicative of consolidation characteristics. Why is that helpful? Why am I even mentioning that? I could just say it's in consolidation, right? Why is that important to be able to analyze a little bit deeper? Because you get an understanding of why it's consolidating. So you're not sitting here demanding super extreme expansions and you already know how to manage your risk if that's the case, right? It's very important to be able to analyze the conditions. So being able to reason with and make an argument for why something's doing what it's doing is extremely important, even in consolidations. And you don't even have to trade consolidations. You don't have to trade any of the crazy news events, right? You could trade after them. You should, if you want to, but it's not mandatory. It won't make or break your career if you don't trade in FOMC, NFP, ahead of Fed speeches, in consolidations. There is models that help you trade in consolidations. One model that I use is market maker buy and sell models, because if we're in a bouncy consolidation going back and forth like this, the highs are original consolidations for market maker buy models, and then once price hits lows, that market maker buy model, maybe it comes back and attacks the buy side. As a result, once it takes that, if we're still in the consolidation, it's going to then potentially want to seek sell side, and that sell side would turn into a market maker sell model, and then it'll bounce back and forth doing that continuously until it breaks out. And then of course sometimes there will be times when it's just kind of doing absolutely nothing, in which you got to be able to analyze that. You got to be able to confirm that that's happening, so you're not in there throwing good money after bad. But that's another powerful reason why market maker buy and sell models are so amazing. So definitely think about that. Don't go in and start trading it right away, assuming things. Go in and study it. Look for the characteristics of these things in consolidations. And I promise you will walk away with some shocking pieces of information. Okay, so yeah. So yeah, we'll see how price wants to open up here. Again, we're still kind of stagnant. Let me go check the comments. My bad. So there's consolidation and new opening gap. Yeah, 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 Mark, 100%, brother. Gunny Gates, what's up, brother? Appreciate those of you that have liked the video. Uh, just want to definitely remind those of you that haven't already, though. Um, Definitely like the video. Subscribe to the channel if you find value in what we talk about. Um, if you have any friends that you think could benefit from the stuff we talk about, or if they can add to the community in terms of value, that would also be much appreciated. This is like a tight knit family, even on here on YouTube. So I definitely do want to bring in more and more really good traders that could bring value, and also new traders. Doesn't matter what level you're at, you can bring value with just your experiences going through certain things. Because I'm sure that there's others. I'm 100% certain that there's others that most likely go through the same things that we all struggle with. Okay, it's very common because we're all aimed at by the algorithm. Okay, it wants to take advantage of us. So getting a solid group of people that can add value to each other, it's definitely a goal of mine. And again, if you support the channel, it's free to like and subscribe. And again, it's much appreciated. And I thank you to those of you that hop on consistently, because there's other people you could watch, but you choose to come here and listen to what I have to say. So it's greatly appreciated. Right. Tyler said there's a bullish breaker on the 1 minute for some invalidation for short-term buys. Remember, you want to make sure you're using lower time frame levels for entry, finding your entry pattern. You want to have framework a little bit above those really, really tiny micro time frames. Of course, that's if you want to get larger moves. But it's even more beneficial, though, for smaller moves. Because if you're in line with a big move, you could practice getting the tiny, 20, 30 points we always talk about. But then if you see price really ramp up and accelerate as a result, but you start taking minimums first, you'll end up being able to grow into identifying larger swings in price delivery versus like a 1 minute scalp that goes maybe maximum 20, 30 handles and then just turns around and does whatever it wants to do. So yeah, you want to calibrate framework from 5, 15 minute, 1 hour, and then if you could position from a liquidity pool or a PD array or something in terms of the framework from those upper time frames, if you can calibrate that down to the lower time frame, which is where you find your entry, you can really catch a tiger by the tail a lot of times. And then you can also, when you get in, you can also start to manage the price delivery and your entry on those upper time frames as well. Very, very helpful in terms of trying to find bigger moves. But yeah, let's see what happens. Yeah, you're right here. That is a change in the state of delivery. That is definitely a change in the state of delivery here. And we got some pretty obvious highs up here. Again, I don't want to see this high taken if we're going to try to continue to trust shorts. We are, again, in a consolidation. So we want to be very demanding because in consolidation, it can go either way. Obviously, if we're going to assume anything, we're going to assume that the higher time frame narrative is going to remain intact as it has been, at least for now, which has been bearish. But there is a potential likelihood that we do run up and try to take out some buy side. It is Tuesday, so there's still some manipulation that can take place. But again, we're inside this new week opening gap. We're inside of a large consolidation ahead of a very impactful news event, the Fed speech on tomorrow. So again, you got to keep all these things in mind and be extremely demanding. I can say that if you did think, oh, I'm going to take this as a breaker to buy, if that made sense to you and it was profitable, just looking at price, obviously you can't really make an argument that it wouldn't have played out because it did. For me, I wouldn't have an argument for that because I just wouldn't take it. It's too close to the open, which just took place. So I'm going to wait till probably 650, the next macro, simply because we're in that consolidation. The first macro we saw earlier didn't really offer much. I mean, you can make an argument that it offered this short. But other than that, it's kind of just been iffy, you know. So I'm going to be very demanding today. We're going to be very patient. We're not going to miss anything by not taking a trade in the first 10 minutes. We want to use this first 30 minutes as a opening range, get a feel for what price is going to want to do, what liquidity is left available within that first 30 minutes, at least up until the macro, just 20 minutes away. And then we can make a decision on what may be worthwhile versus another. All right, so yeah. Oh. The hell happened to my camera? Can y'all see me? God, why does this keep happening? What the fuck is happening? Can y'all see me now? Oh, God. Yeah, okay. God, it's so weird. I think I need a new camera. Yeah, so Bullfrog made a pretty strong mention here. Retail is shorting. I would like to make the argument that most people are probably thinking that the bottom's in. You know what I mean? Obviously, we'll see what happens. Retail may be shorting, right? I mean, everybody's doing everything right now because nobody knows what the hell to do. They don't know what to expect. My little brother, Tyler, which I'm Reckless in the chat, said that he mentioned a bullish breaker. I'm going to give you your props for that one, brother. That was a beautiful call. Definitely worked out. We could see the delivery here, right? The fair value gaps overlap with this run here. Shift in market structure. Your argument can be that that's a balanced price range to target the buy side. For me, I'm interested in trying to, I want to see how we're going to behave up here. Because again, any type of buys are going against the higher time frame narrative. And there's so much manipulation around the fact that price jumped because all Trump had to do was say buy the stock market and it jumped. So I'm trying to gauge whether that was artificial, especially with the fact that there's deals hovering around. So, we want to make sure we're being very cautious. It's not a time to just go in and just throw random trades. I'm not saying that breaker you mentioned was a random trade, Tyler. That was actually a really good call. Just didn't offer enough for me inside this consolidation. But again, that's my opinion. If you can make an argument as far as why you think this was going to run, don't let me stop you. As I always tell all of you guys in my private community and even here in this free community, I really, really want independent thinkers. I don't want entitled signal junkies, people that think that they can't do it on their own, so they just want to copy. It's cool to copy to get muscle memory, but yeah, I want to promote you studying, and maybe if there's enough demand, if there's interest for you guys, maybe I can have like once a week YouTube study sessions where we backtest or just purely have a Q&A style thing. I definitely want to talk to my private community about some stuff like that. I got some good ideas. So, yeah, let me know if there's any type of demand for that between you guys that are here currently. I appreciate all you guys that hopped on. We've got like 8 or 9 people on. Solid. Look for standard deviation draws out too. You're talking about the day trading model from 2016, right? That little central bank dealers range, flout, Asian range projections to try to pin down the higher low of the day. Is that what you're referring to, Mark? So again, let's watch how this behaves. If we get back down below this fair value gap, especially if we get down below this, that is absolutely keeping us interested. So you said something about the standard deviations, 4 standard deviations to draw it out to. Are you talking about the 2016, like the flout range, the central bank dealers range, day trading idea for Power 3? Is that what you're talking about? Or are you talking about targeting standard deviations when you said 4 standard deviation draws to? Okay, yeah. Definitely do that. So I could look at it. Bullfrog, by the way, is one of my superstars in my private community. He is amazing, to be honest. He's been with me for a while, so. And he also has a YouTube channel. Go subscribe to his YouTube channel. He's going to be posting more content. He's worthy of being listened to. One of the men that I really respect that the internet has allowed me to talk to and connect with. So, yeah. Just want to say I'm grateful for you, brother. If I haven't said it enough. Okay. So yeah, let's continue to watch this. Again, I'm not fully trusting the behavior here. DXY especially is kind of stagnant. So again, we're in a 50-50 environment. I mean, you could be profitable in 50-50, right? I mean, you flip a coin and, you could either be right or wrong. I'm honest when I'm unsure. I'm not going to sit here and try to lie and be an idiot. Okay. It's not reality. And I don't respect people that sit here and try to be right every 5 seconds because it's impossible. There'll be times when it's fiery. Most of the time it is for us. It's not to brag. It's just I've proven it publicly and live for 3 years. But when there's times that I'm uncertain, I have no resistance to sharing that with you guys because I'm not perfect. I'm just a normal individual, just like all of you guys. But I've put a lot of time into this, so I can see when things are somewhat rough or unfavorable for me personally. But that doesn't mean like what my brother mentioned, right? In the chat, he called a breaker as a potential buy. Now, if he would have taken that just because I'm saying that I'm unsure, doesn't mean that it discounts what he sees in price and what he called out. If he would have taken that, right? Independent thinking is very important. And being honest is very important because if we sit here looking through rose-colored glasses constantly, it does you a huge disservice, both if I'm doing that as the mentor and you especially being the student doing your own studies. So definitely keep that in mind when you're doing any type of back testing or engagements in the market or even watching videos. You want people to be transparent and honest. There's enough liars in the industry. You become part of the minority if you be honest and show the realities. So we need more of that. Right? So yeah, obviously this is a pretty strong run. Didn't really offer anything that I would have liked. I clearly see that it used this down movement here, overlapping with this price delivery. It used this area as a balanced price range. And we've also used, I believe, in this inversion fair value gap that I labeled, I believe it bounced from the 25% level of the fair value gap that was created here. Okay, so I used that, definitely delivered through to the buy side after taking sell side liquidity. And also, you could see the respect from the new week opening gap low. It kind of just filled it in. So we've offered buy side, sell side, and now let's see how we can deliver from this midpoint. We do have this large wick here. So if this wick is going to stay intact, that's supportive of price continuing to go higher. Okay, so we're reading order flow. And if we see price decline, we don't want to see, we prefer to leave this open. If that's left open, then I'm pretty confident that we'll probably get up into even, these equal highs up here. I've been mentioning these equal highs for the last couple days. So again, there's a likelihood for this to want to get traded back into. If it does trade back into that, it just kind of goes back to what I was saying earlier, how I don't like to short when there's equal highs, regardless of what the narrative is. And I don't like to buy when there's equal lows left. I need to see them taken first, because that initiates the fact that work has already been done. They've triggered in orders on the other side. So what do? They trigger in the opposing side, pair their orders with those stops, because there's people trying to short here, right? They're trying to see price break this and turn it into resistance, because that's the traditional way of thinking. Because that's the case, because that's like what the masses think, they use that against them and do things like this, aggressive. They didn't want to let them get in, right? They didn't want to let them adjust. So what happened? It really rammed higher fairly quickly. So let's watch how this wick is going to be respected or not. Only way that I'll think about trying to get back into a short is if we can violate back through this inversion fair value gap I mentioned earlier from this 15-minute. Otherwise, right, it looks pretty confident that it wants to reach for some of the buy side up here. We did have also this bearish breaker I mentioned yesterday in my private community. So we'll see how that wants to behave as well. We're basically returning back into that. So again, we'll see kind of what that wants to do. We also have this fair value gap. We have a run on stops, shift in market structure, and now it's just really ramming to the buy side. All right, so again, we're inside this consolidation. We started the day favoring and will continue to favor overall the downside delivery taking place. That all changes if price just continues to rampage higher. Then obviously we can make our adjustments if necessary. For now, we want to try to see how long this is going to continue. I want to see the behavior once we get above this, because we are reaching into a bearish breaker here. Now, if it violates this bearish breaker, again, it's just continuing to build a narrative that this is potentially in the crosshairs. We've been just overall consolidating, right? So we have the midpoint of this new week opening gap. It's really ramming above that, right? It seems like we basically dug down below the daily open price, set a potential low here, and now it's really started to push through that. This is London's low. So notice how we swept London's low, paired that with this run on stops that then ended up going higher. So we'll see, again, how this is going to continue to deliver. For now, it seems like they're favoring buy-side delivery. All right, if we go down here, if you look at all this price delivery, you don't really see any YouTube model opportunities on this 1 minute. It didn't really offer anything. So did you miss a move? Did I miss a move? No. Even if I was here assuming buy-side, unless I did what my brother talked about and called that breaker, there's not really much of an opportunity in here when it comes to the models that I like to engage in. Remember what I said about that large wick I pointed out on that other time frame? Notice how it's a large wick on this time frame overlapping fair value gaps. I said that if it's going to hold there, if we're going to continue going higher, if order flow is going to stay bullish, it's going to not even try to attempt the midpoint, because this here technically should act as a balanced price range. Now, if this starts to get violated, say we get a very strong displacement lower from this area, breaking through these areas, possibly getting down below this 15-minute fair value gap, turning it to an inversion, then obviously that will then start to make the argument that sell side would continue. For now, we're reaching into a bearish breaker from that 15-minute time frame. So I want to see how price is going to behave there. We also have this buy side liquidity pool. So we're going to continue to monitor that. We're keeping in mind that the narrative is still bearish, higher time frame wise. Bias wise, right now they're chasing the buy side. Is that going to be used to just pair shorts back inside the higher time frame narrative? Because we are still in a bearish narrative. Just because it's running higher on this lower time frame, that doesn't mean that buys are now kicking in fully, and we're going to start looking to buy only. We'll definitely see, right, how price is going to behave here. If this wasn't in consolidation, and it was, just given this retracement after price declined, this is what I want to see for a short. Okay, because we're attacking the opposing liquidity. But again, there's lots of different factors aside from the consolidation that puts us in a 50-50 environment. So, are you willing to engage 50-50 environments? Right? Like this may want to run higher. Does this fit any of your rules? Or is your assumption for buy side and finding an opportunity just based on the fact that it's going higher, so I'm just going to buy anywhere? You got to really reason with these types of thoughts. Because if it doesn't fit whatever it is that you do, and you're just trying to buy because you don't want to miss a move, you're building bad habits, and you don't want to do that. So we're seeing the respect to this level that I mentioned would continue to support price continuing to go higher. If it was respected, we could not even get into the midpoint there. That's a pretty telling sign. Again, only way I look for shorts is if we violate back down below these lows, because this is a pretty strong movement to the buy side. So, until it proves that it wants to kick back in alignment, I'm not picking tops, and I'd rather wait. Breaking this high though, you can consider this as a respected balanced price range, which if it stays intact should continue to support buy side delivery. But you could see this as a run on stops, possible shift in market structure. If another fair value gap is left, maybe that is going to be the scenario that sends us up through the potential highs up here, maybe even getting up into this area up here, which is a new day opening gap from previous week. And it's also a previous day's high, right? Whoops. All right, so now we're getting into a macro. So now my considerations for identifying particular moves is now open. We see that the data we've accumulated from the start of the session left a regular trading hours gap down below. Is it more than 100? 62. Kind of small. It's a decent size range for that though. So let's see how price behaves once we get above this high. Remember, I was watching for this high to act as an intermediate term high. Now, if it wicks above it, then aggressively reprices below this, I'm interested in shorts. If we just continuously smash through this with a huge body candle, I'm assuming that it's probably not going to short, and today's going to, have interest to want to continue to blow out buy side. Why can both sides be painted? Because we're in a consolidation, right? We're inside of an environment that is 50-50, okay? So because that's the case, it's only reasonable for you to make an argument for both sides. ICT says that if there's an argument able to be made for both sides, that's a low probability condition. And, you got to make a decision. Are you willing to put risk on? If you are, my advice is you want to cut your risk by half. It should already be cut in half because we're in consolidation. It should already be cut in half because of the current overall geopolitical landscape and all the uncertainty that's in the marketplace. Whether you take that advice obviously is up to you. There's some people that are risk averse, more risk averse than others. And then there's some that are really aggressive, but again, you have to make that decision on your own. I'm just here to give you my own thoughts, my opinions, how I operate, and you do what you will with what I talk about. But yeah, this is pretty interesting here. This is going to be a very, very strong deciding factor based on what takes place in here. We want to go map out where the first presented fair value gap is. That is right up in here. So again, let's watch. Let me pull up DXY. So yeah, let's see what DXY wants to do here. Again, nothing is screaming shorts to us just yet, unless it violates these lows, right? Otherwise, it's just going to continue going higher. Lots of the buy side confirmations for order flow have been intact thus far. I can tell you one thing though, if we get a displacement down below this low, this run higher can be looked at as a market maker sell model. Again, and then that observation, if we see that fail, it just further adds to the reasoning for price to want to go higher. And then DXY is tanking. Obviously, that continues to also support that idea. So yeah. Again, I would prefer, like I mentioned earlier, to see DXY run higher, to give us that strong retracement. And of course, if things are correlated, or reverse correlated in this case, how they should be, that should promote downside in the Nasdaq. But let's continue to watch this behavior in here. So 15-minute breaker, like I mentioned. So as a result of this trading into this level or into this area here, if it was to get a displacement down below these lows, again, that's when sells can be considered. Otherwise, price is just marching to the buy side, right? And if we look at the current structure overall, it has basically performed a bullish power 3. Right? So if this just continues and leaves these areas available, again, it's continuing to support the fact that buy-side delivery is being supported. So yeah, we're inside the macro, so it's going to make a decision, in my opinion, very soon. In terms of like what, for the rest of this session at least, should be respected. I'm not expecting a large range today because the news is tomorrow. Heavy news, very, very chaotic, crazy news. It's probably going to determine whether price is going to rebound or not, because Fed Powell's speaking. So again, that's part of our expectation today. Part of the reason why we're extra cautious, So yeah, let's continue to watch this. I'm curious, was there anybody in the chat that took a buy, aside from my brother pointing out the breaker from earlier? Let me know in the chat. You did? Okay, beautiful. Yeah, Mark, yo. Mr. Independent Thinking, yo. I love it. Too long position. Can you share that in the private community? So we can get that independent thinking, and so some can pick your brain a little bit. Appreciate you, brother. Yeah, see, look at DXY. Let's see if this translates to what I was mentioning. I would like to see, what I prefer to see, which is this obviously racing towards buy side in some capacity. Whether that's just to get up in between this little gap in here and purge this high, or if it just wants to have interest to get up into the daily volume imbalance. I would much rather prefer it come up into there to then support whatever we're looking for to the downside in the indices. But again, we need to wait for Intel. So now look at the delivery that's taking place inside the buy side liquidity pool I mentioned, right? So middle of the new week opening gap is here. You want to keep that in mind. We have this first presented fair value gap, and we have this balanced price range. Buys get invalidated when price breaks through those levels. Sell side kicks back in alignment when that takes place. That would also be in alignment with what the higher time frame narrative is. That's why I'm waiting sitting on my hands in terms of buys, because obviously I'm looking for DXY to do one particular thing before it looks to short, and then of course that should translate to this potential idea for price to want to go lower. I'm demanding that, right? If it doesn't do that, guess what? I'm okay with waiting for a lot of evidence in order for me to switch my direction. Because if you switch too early, go against something that you assume, or if you have one opinion and you take someone else's opinion and disregard your own because of what someone else says, obviously that becomes an issue. That's a bad habit. Right, so yeah. Did anybody else take a buy in the chat? Or have you guys just been tape reading with me? Yeah, keep in mind what I said about this balanced price range, that wick that overlapped. It's a very powerful thing I've been mentioning. Because you could see it supported the buy side push in price. It's a pretty strong movement, getting us up into that level. It was in a very strong hurry to get up there, so that's pretty interesting. There's not really much positive changes when it comes to the economic landscape in the United States, but because of that uncertainty, we see again, the consolidation ahead of also the news event coming out. Let me see. Is there some of yesterday's regular trading hours gap open? No, pretty much cleaned up all of it, so there's not really any gaps up there. Maddie, another private community student, said he took a 25-point scalp on the 15-second, aggressively tightened stop loss to break even, so runner got stopped at break even. Remember, Maddie, when we're in conditions like this and we're identifying these types of things, like I tell you guys, your target should be 20 to 30 points. So if you're able to achieve 20 or 30 points within that delivery, instead of moving it to break even, lock in that minimum, because that's your main goal at the end of the day anyway. Because there's no guarantee that it's going to run further, especially because we're in a tight consolidation and we're ahead of a news event, right? And now, if it was trending, right, of course, if you are able to bag 20 or 30 points, but you took one off at 25, okay, yeah, that's good. That's good. That's a good perspective to have as well. Just take some off. So yeah, scratch what I just said. But those of you that don't know about that type of stuff, like in terms of risk, if you get 20 or 25 points and we're in a condition like we've described today throughout the last couple of days, bag that 25 points, right? 20, 30 points. There's no guarantee that it's going to run hundreds of handles, okay? Like, you're going to want to secure that. And then when price trends, right, when things start to open up a bit, which they will, then you can maybe consider being a little less aggressive. Oh yeah. Yeah, you like that emoji? I seen that thing. I'm like, yep, that's the one. But yeah, so what we see here is still a pretty strong indication that this bearish breaker is still pretty valid. So my attention is down here at this swing low. Because, I mean, this, if it does look to sell, just imagine, right? If it violates this low, we've already taken buy side, downside narrative is active on the higher time frame. DXY has a possible likelihood to run higher, although it may look to chop around because, DXY has been put through the ringer lately. But if it was to shift through this, violate this balanced price range, turn this first fair value gap into a inversion, I mean, again, this looks like a pretty nice market maker sell model. to get down below the low. Looks like it could, dragged in one side, dragged in the other side. So violating this low turns buys off. Staying above that level, continuing to rage higher. We got a wick here too. Staying above the midpoint of that, if it does, it's all confirming that buys are still moving and are still trustworthy in that regard. For me to consider trying to take a short based on things we've talked about, DXY preferably needs to run higher. At the same time, I need this to violate this swing low here and get below these levels, leave a fair value gap, and then that's when I would consider to try to short. Otherwise, price is just going to continue to gravitate. So currently right now, sells are kind of off the table until certain things happen. There's if-then scenarios that have to be taking place in your mind. What else thinks that way? What else does that type of process? An algorithm, right? Algorithms are programmed with if-then scenarios, right? So what we do, our process, the way that we operate in the marketplace, in itself is an algorithm. You know what I mean? So your system technically is your algorithm, right? It's your creation using these particular elements. So yeah, let's see how this 15-minute breaker is going to either hold up or continue to try to smash price lower. We see the volume imbalance here for the euro. Things are really not doing much. They're kind of stuck above those highs here. These equal lows down here look pretty crazy. Down below that balanced price range. It's been a pretty crazy run higher for the currencies. So we'll see if that continues. Lots of buy side liquidity has been layered up here. It's very interesting. We're kind of coiled up. You see that? So price has to break out of that to give us an indication as far as what it's going to do. But again, if you follow the higher time frame, this coiled up effect, maybe it does retrace and goes higher. That would be the assumption. That is the current assumption based on what the higher time frame is showing. If it declines here, it's most likely going to be short-lived, just retracing to run higher. The levels below that I've mentioned on that higher time frame, down here, right? Multiple PD arrays getting violated. That's what turns my interest from buy side to sell side. If that doesn't take place, any type of shorts are short-term in nature when it comes to the currencies, given what we see. But again, if the DXY wants to give us that retracement, it doesn't look like it's going to really do much. Seems like it's just at a point where it's just really anticipating what's going to happen tomorrow. I'm telling you guys, tomorrow is going to be very, very crazy. Right? But again, the levels I mentioned that would invalidate buy-side delivery have not been purged yet. So what does that mean? Buy-side's been the only interest. Right? So there was scenarios that needed to be painted. They're still in play. Right? I'm still trying to see if we can get those things to take place. But I'm demanding price show me what it needs to show me so I could frame a short. Otherwise, I'm more than happy with sidelining and allowing price to move past me. Right, so yeah. Look at the chat. So yeah, let's see how this is going to deliver here. We're still inside this macro. So as you can see, the macro has not really been too eventful. It's kind of got stuck. Again, it's more favoring buys currently, as it's been since a little bit before the 6:30 open. In my opinion, because the higher time frame narrative is bearish and we're cemented in that, Again, any buys are short-lived until we see a dramatic change on that higher time frame. And let's see what happens, right? It's going to be amazing if we see this completely smash lower, because it's going to just be another example out of the hundreds of examples where, you know, trusting the higher time frame comes into play dramatically. You know, so you root yourself there. It makes life less stressful as a trader. It makes it less likely that you're going to beat yourself up in terms of your skill set currently. And it just really, really drives home the point that the higher time frame is so needed. You know, you'll see some people on the internet that don't look at the higher time frame, and that's fine. Everybody's different, you know, but even the best of the best lower time frame traders should be using the higher time frame, because that's where big money's playing. Don't you want to play with big money? Right? Like, isn't that where we want to be? Isn't that where we should think everybody wants to be? Is navigating with smart money, or whatever you want to call them, right? So yeah. So there's no displacement. DXY is displacing, so that's kind of interesting. Let's see how this impacts what the indices are going to do. Let's go look at all three. So we got all three pretty much gravitating higher. That major crack in correlation still present between the DXY and the indices. Basically, they're moving together, which again is a signature highlighting the heavy manipulation in the marketplace. When this type of thing takes place and prices, maybe you're looking to buy, right? When you see the DXY buying with the indices or the foreign currencies, you run the risk at any moment of price turning around and kicking back in line, like a switch gets flipped, and then all of a sudden price is now back in sync. Right? That's why you got to be very cautious when you execute when there's a crack in correlation or in high resistance environments, because a lot of times these cracks and correlations can just switch instantly, and then you could be caught offside, and it could become a real issue. So price rallied up pretty strongly, swept the high, now gave a pretty strong rejection away. It's the 1 minute, so it's not really too dramatic. So we'll see what happens with this fair value gap. But again, I'm more than happy to just sit and wait. Now, of course, looking at price in here, again, going back to what I said earlier, if you called a buy with your own thinking, right, your model maybe was there, maybe you took this balanced price range idea and trusted the fact that price was going to run higher, saw that it respected the balanced price range, and you used this run on stops back into a fair value gap, maybe this was an opportunity you chose to engage. Some students engaged, as you see in the chat. There's nothing wrong with that. Just because I'm demanding shorts and I'm refusing personally to engage a buy because of the conditions we're trading within, that doesn't take away from the fact that this did go up. If you got in line with it and you're able to make an argument for it, then so be it. Don't let me take your independent thinking away. Don't let nobody, even ICT, take your independent thinking away. Because you have to depend on you in the market. So you take advice, right? You get perspectives, different tools from different people. But again, never let your independent thinking get taken away just because you see somebody doing better than you. Find the skill sets that you can mine, find the piece of information that work for you, and build your system. Because we have a beautiful luxury as ICT traders to build our own systems. Doesn't mean we go out there and start bragging like we found something and we're the founders of order blocks or whatever, like a lot of dumbasses do. That's totally ridiculous and has no integrity. But if you make a system like us, we have our own process system, way of analyzing, our own sequence in terms of using the tools ICT has given us, and it's unique. I do things that many people don't do. I explain things different than many people do. I see things differently than many people do. that trade very similar ways and very similar overall models. Doesn't mean I'm like the founder of the models themselves, but the sequence in which I use this stuff, how I use it, the way that I see price delivery, it's unique, just as it's going to be unique for you. So I want you guys to take pride in that, and again, use that as a reason to never let your independent thinking disappear just because you see someone else doing better than you, or someone being where you want to be. You can't compare your 1 year or chapter 1 of your journey to someone's chapter 12 or chapter 8 or chapter 20 or whatever, So yeah, just want you guys to always remember that. It's very important. So yeah, you see how prices just kind of, became lethargic. DXY is on a rampage. So the assumption I made for DXY to want to run higher was pretty on point. Obviously, it took some time to get there, but it's been pretty much on point for us to get up towards some of the buy side, like I mentioned it probably would do. I'm anticipating, obviously, if all things are going to fall in line, I'm anticipating that this should result in us getting some type of displacement to the downside. If it doesn't take place, I'm unwilling to try to push a buy, especially given how aggressive this run higher has been. Mark said, yeah, for those that look at me, I've been trading for 5 years. You can achieve what he can achieve in 5 months. Don't set an expectation that you need to replace others' success. Yeah, good point. Very good point. Dang. Yo, Mark, we've been trading for almost the same amount of time. That's wild. That's pretty wild. Man, it's amazing because you've brought tons of value to the community. You said that I brought some value to you as well, and that's the magic in building this type of community, and just the magic of the freaking internet, right? Like, it's amazing. Yeah, exactly. Yeah, it's amazing. I didn't even know that. I think you probably told me before. Maybe I just forgot. But yeah, that's amazing. Yeah, I appreciate that you stuck around too, bro. You stuck around for years at this point. It's been what, like 2-ish, 3 years, I think? Something like that, maybe? Somewhere around there. Maybe more like 2 years. Yeah, it's been awesome. So yeah, let's see what this brings us. This right here is the midpoint. Yeah, so have I watched 2017, 18 mentorship? You mean 2016 mentorship? Because it's all like basic. I mean, it's all like coupled together. I mean, if you're talking about like some of his charter stuff, I've seen all of his charter stuff. Very much involved with the mentorship. Class of 2021. Mark said, I like the way you teach, what you stand for. Very hard to find in this large community. Yeah, 100%. There's a lot of egotistical maniacs. Okay. But it is what it is. Very hard to find. Did I miss anything? Appreciate you hopping on, Hadai. I don't think I've seen you here before. I appreciate your time, brother. And you chiming in. Yeah, that's what it seems like, huh? So yeah, let's watch this, man. What I mentioned, let's watch this. Higher time frame narrative is bearish still. So look at that. Let's see if we can get this to give us a nice displacement. Remember, this large wick down here created a balanced price range. That's why it stayed above it. So if we start seeing balanced price ranges violate, we also got this down candle here. This may, in fact, actually turn to a breaker. This in itself may be an early, more aggressive breaker. Given the fact that it's consolidation, I don't trust it. If it was a different situation, I'd be more willing to be aggressive. But it's just the way that I am. Again, it's just my opinion, the way I think. It may make me miss this, and this may very well turn into the high that drops attacking the sell side, right? I'd much rather prefer to see us get a little more conservative entry, at least for myself. But let's watch this, right? Let's see what happens here as a result of DXY being so aggressive to the buy side. So you can see that it's just been very much stuck. This orange area here, that's a 2-day fair value gap. We're kind of navigating in between the mid portion of that as well. So that's a pretty interesting observation there. Keep tabs on. So yeah, one thing I'm looking at right here, fair value gap, overlapping fair value gap, run on stops, possible shift in market structure. If this can act as a balanced price range at this current moment with DXY rallying, again, that's another potential, another reason why, this may end up still declining. Like I mentioned, narrative is bearish. We don't change what we believe will take place on that higher time frame just because the lower time frame goes against it. Buys are short-term in nature given the narrative on the higher time frame for at this current moment, until higher time frame levels get violated, multiple. I like to see actual evidence, like clear as day evidence that the narrative has changed. There's a 15-minute, 1-hour SMT. Let's go double check that real quick. So yeah, look at that delivery from that. Boom. So that aggressive entry, like I mentioned, took place. So now price is digging through. Let's see the behavior with the down candles here. Let's see if it can. Remember, we're still in consolidation. So any entry, if you're following my advice, is cut to half risk because of the current conditions. If it was trending, it'd be a different story. But because we got the current risk profile we're involved in, we got to make sure we are being cautious, not being gamblers like everybody else. So yeah, look at that. See this fair value gap? This is a breaker here. Candle went right up into it. So let's see how this behavior is going to be here. Now I'll tell you one thing. If price does this dig lower, violates this high up here, my attention goes up to this upper area. Otherwise, I'm now interested in trying to frame short ideas inside this lower time frame market maker sell model. Got this potential balanced price range now being violated. First presented fair value gap is getting traded below. So yeah, this is what I've been trying to wait for all day. Middle portion of the regular trading hours gap. Let's see if this can act as a resistance level in here. Didn't offer any opportunity besides this one. See, and if I was aggressive, right? If I would have been aggressive, it played out like I mentioned with the balanced price range if it was going to hold. Because of the conditions, because of the current consolidation, I won't do it. And I'll miss moves because of my rules, and I'm totally fine with that. Yeah, it sucks sometimes, but hey, I'd rather feel the pain of discipline than the pain of regret. I'm going to keep saying that continuously because it's not worth it. I felt so much being a trader, and over time you just learn to, and you get sick and tired of making mistakes that can be avoided, and you'd much rather miss a move than break a rule that you know is saving you most of the time. And as you guys know, there's moves that take place all the time, constantly. But yeah, this is, again, a beautiful example of what I said throughout the session, all the time. Higher time frame is king, okay? I mean, this is beautiful proof of that, right? There's a lot of people that were assuming, oh, we're probably going to buy. It's going to be, not bearish anymore. Not us. Okay, everything buys were short-lived. We mentioned that continuously the last couple days, or last couple weeks. Well, 1 week, because price gave that strong movement. So yeah, it's just a beautiful evidence here. This obviously was the move. It was the best move so far for a short, in line with our analysis, trying to aim for price to drop. And we finally got it. But again, my rules, the current consolidation that we're just struggling to get out of, kept me away from it. Let's watch this here. This is that inversion for value gap from earlier. I don't believe we'll have interest to want to dig higher. Watch this for value gap. We're hitting this regular trading hours gap. Notice how it filled the whole thing. It's pretty interesting. I don't like how DXY is giving this nice vicious decline here. So yeah, let's watch how this fair value gap behaves. This seems to be a market maker sell model so far. So we'll see if that wants to continue. We're still back inside the middle portion of that new week opening gap. Still, from what I can see, back inside of the equilibrium from the current range high to low. We're basically dead smack right at it. So again, that makes things higher risk. Being in a consolidation, all the other factors, then resting at equilibrium. I'd much rather prefer to see price commit rather than try to bounce around and push too hard. This was offered, right? So currently right now, I'm not fully invested in taking another entry. That's just the way it's going to be. Okay. So yeah, let's see how this behaves. Now, if it could stay below this and we can get DXY to continue to run higher once more, this may just be a retracement. I don't like how it spent little time below this inversion fair value gap from that 15-minute we pointed out earlier. It's a very large wick. So, I mean, things are extremely volatile right now for whatever reason. Again, we did take out that buy-side liquidity pool. I mentioned how price trades above this, whether it wicks through it and gets quickly down back below it, or if it just blasts through it, that will determine essentially what I'm going to trust for the most part. And trust as much as I can inside this consolidation. But because we're in that consolidation, I'm trusting more of the higher time frame. That has served me well, served all of us well that have been talking about this when it comes to what's actually transpired. It has declined, right? As I said it could, has a likelihood of doing. This first fair value gap, I like this delivery. That's nice. That's pretty nice. This, if it forms a high here, fractal high, it needs to act as an intermediate term high and hold price inside that level, quickly get us back below this level, and then use this as a potential inversion, which then could be the catalyst to send us down below here. I'm looking at this again as a market maker sell model. So if it was to fail, again, that's just pushing for the other side again. And then this may turn into a retracement, which comes all the way back up. In that case, if it does that, just think about it, right? Do you think your current skill level affords you the ability to navigate something that is extremely like back and forth like that? If it was to run up into this level, even people that feel it, that they can trade that, I mean, you can't make the argument that this is not a higher risk environment. You can't, And so it promotes the need for more experience and a level of self-control that most people don't have early on. And if you have any doubts, right, and you're getting anxious, like way too anxious about things, and maybe you called a couple things incorrectly, your mindset's already getting in a spiral. So if you take a loss and then price ends up going in your direction, you don't know for certain that this consolidation is going to stop and it's going to be one-sided. And again, these aren't things that people like to hear. Okay. And it is what it is. Again, I'm not one, two mince words and sell you some fake dream. Overall, though, aside from that, we have been on point. Even if you would have taken this return back into here, because I like how this respected this. That's very indicative of the fact that price is probably going to continue to drop. Unless, of course, it trades back above it and violates it. In which case, I would be very hesitant to even try to push it a short again. I need even further evidence, and I'd probably wait till the macro. It's kind of what I'm doing right now already. I'm most likely going to wait till the macro over here because I missed this one. Obviously, I could have taken this one as well, but my finger's not heavy on the trigger today. Market maker sell model seems as though it's printing fairly nice. Let's say this is the first accumulation. Possible second stage or second accumulation is right up in here. If we drag that over, we could see that there was a beautiful respect to this range to the left. Let's see how price chooses to mess with this. If price is to violate this low here, this wick mixed with a large displacement through should act in the same capacity as this one did in terms of a balanced price range. So now, as price is printing lower, it should not get above this if it is going to want to blow these lows out. My attention is here. It's been here since we got up here, and then it really got focused down to this low as this printed over here and didn't break outside of this first fair value gap. All right, so we're watching how this is going to behave. Notice the middle portion of this regular trading hours gap. Let's see if this wick can respect that and continue to slide price lower. This is a second stage distribution. It may use this particular area in price to quickly get us down below here if we are in fact going to finish this as a market maker sell model. Smart money reversals up here. Where is the smart money reversal? That's a very important fact right here. The smart money reversal occurred at a higher time frame PD array relative to the time frame that we framed this market maker sell model on, which in this case is the 1 minute. We've got these consecutive up candles. It's actually an order block. So let's see how that can be respected. We're below this 15-minute fair value gap I pointed out earlier. I don't like the color scheme right now. There we go. So let's see how this behaves. I hope you guys have been getting value today. Thank you so much for liking the video, those of you that have. Again, it really helps the channel out, and I'm here to help people, and the only way I can help more people is if I get in front of more like-minded people like you guys. So again, I greatly appreciate you supporting the channel and the goal I have to help others. You know what I mean? So 1 minute, 15 minute. The bearish opinion has been helping a lot. Yeah. What about the higher time frame focus that I've been really drilling into everybody, especially you, since you started really pressing into things, Tyler? Has the higher time frame focus, like really narrowing you down into there, has that been helpful too? And just like seeing it. I mean, you're live with me daily, like everybody in the private community. We just talk about this stuff nonstop, right? Yeah, that's been helping a lot. Okay, cool. Yeah, it's so powerful. One thing before I don't get the chance to mention it, again, if this high is violated and we end up seeing this market maker sell model fail, failing market maker buy and sell models is extremely helpful, right? It shows you a further layer of confirmation that a particular narrative or bias, right, depending on where you're identifying it at, when it fails, it just amplifies the fact that your initial idea is failing. So then it allows you to have confidence in adjustments, right? Aside from the 3 PDA rule and the other invalidation tactics we talk about, failing market maker buy or sell models, right? In this case, if it's a failed market maker sell model, that is supportive of price being bullish, at least in the short term, right? And it turns off our interest to try to frame out shorts. Okay, so if this fails and like races towards the buy side here, we may be seeing this market maker sell model fail, at least for now, and we may see price try to drive up a little further. Now, if you would have taken this entry here, if you follow what I tell you guys to do in terms of targeting, this offered the minimums, right? Well over the minimums. Almost over 100 points just off of this continued push lower. Something I'm watching here, obviously, is the high in this fair value gap, but I'm also watching this wick here. Let's see if we can respect that. I'm not sure entirely how confident I am in this holding, given the fact that DXY has now decided to completely tank. This is overall what I want to see DXY do. Again, that ends up being supportive for indices going higher. I'm not quite there yet in terms of trusting buy-side delivery, as you guys have seen and know in the private community, as well as on here from my Sunday calls and these calls as well. I just need more evidence. But we may start to see the underpinnings of that changing, and things may be transitioning for the indices as well at some point. But for now, again, we've been maintaining our trust in the downside narrative, and that has served us ridiculously well, right? Although there's been times when prices ran higher, that's fantastic. Again, I don't say don't take those opposing views, and those opposing views are not incorrect if you're able to time them properly and frame them out and get them structured to PD arrays and runs on stops, running to levels that may set up the higher time frame narrative. But again, maintaining that higher time frame bearishness overall, even through this large buy-side retracement we've seen, and even in this consolidation, it has proven to be extremely helpful to anchor yourself to those higher time frames. It seems like you miss opportunities, or maybe you feel like you're not doing more than or enough, right, or more than you should, because it takes a little bit of time for things to kick back in alignment. But again, I've been teaching counter trend trading too recently, which I've gotten a lot of good feedback on. So again, that puts you in position to trade the opposing view, So you don't, if that's something you're comfortable with, cool, you can, end up trading both sides. We've been trading both sides in my private community. We've been identifying buys and sells all throughout, like pretty much every price leg we've looked to engage in. We haven't taken every trade because that's unrealistic. But we've been able to identify multiple back and forth moves while still being anchored to that higher time frame. Sells are generally normal risk exposure, depending on the day and what's happening. And then the opposing view, counter trend trading, is always half risk, one attempt. You don't have a normal risk profile when it comes to the opposing trading, because you're trading against the waves. Let me see. That breaker from earlier got hit off of, this one down here. The one you identified. Yeah, kind of did revisit it, huh? Came all the way back down, revisited that. It's a very interesting observation. Let's see what happens. But you see how prices went really high up, and now we got this really deep retracement inside the new week opening gap, ahead of the large news event tomorrow, inside of an overall consolidation. Prices just back and forth. This is high resistance, right? We had a conversation about this yesterday, because yesterday was very similar. Right, we had large moves, deep retracements, large moves, back to equilibrium, right, inside of the middle portion of the new week opening gap. All price delivery just bouncing back and forth, and not really focused on one side of the market, really. It's just back and forth, taking both sides. So that's a beautiful indication of high resistance. Okay, low probability. So coming into any day like this or any week that we see this is continuously happening, thinking that we're going to be putting normal risk exposure is just irresponsible. obviously people can do what they want to do. You know, if that isn't something people agree with, that's totally okay. You know, but if you're listening to my advice, which is advice I've gotten from ICT, you're going to keep these things in mind. Okay. Or you're going to learn through experience. And a lot of times learning just through experience, trying to do things based on what we think, I mean, a lot of times it's going to end in getting put through the fire to learn. And I needed that, you know. So there's not a knock on those that feel that's what they're going to do. Because I am the epitome of that. I didn't listen to nobody's advice. I thought I had everything figured out. I won like 2 or 3 trades, the first couple trades I took. And from then on, for like a year and a half, it was like a shit show. It was hell. You know, because we start this with like this crazy expectation, like I'm going to be rich and buy a Lambo next week because I saw so-and-so do it, supposedly. And then we realize the reality. And sometimes that reality doesn't taste good, so much so that it ends up making people quit. Because, you know, we eventually realize that it's going to take a little bit longer than we thought. And there's more to it than what people promote. You know, it's not always about the entry. But yeah, I'm keeping my eyes on this for value gap. Notice how we're respecting the inversion here. Run on stops, shift in market structure. Seems as though we may be failing to complete this as a market maker sell model. But again, we're right back in, right? We've had a large run higher, large run lower. DXY is tanking here. This is a pretty massive decline from the weekly open, right? We just peaked right above it and then rejected pretty aggressively. So that's pretty telling. But we're still kind of caught inside of 2 15-minute PD arrays. Also, those are encapsulated by the new week opening gap, right? So we're just dancing around inside the new week opening gap, dancing around this 15-minute fair value gap. Also, we're dancing around the bearish breaker. So we got this bullish potential inversion level, but we also have this response from this bearish breaker. Narrative is still bearish, right? It doesn't change. We're anchored there. But so far, we're inside of a consolidation. You know, so I'd be irresponsible if I came out here, you know, trying to get you guys into one-sided opinions that don't exist right now. You know, the one-sided expectation or opinion I have has to do with the higher time frame. That hasn't changed. You know, so what I can tell you, if we do drop down and get below this low, I'm going to use this low as a bearish breaker. And this will be where I decide to potentially engage a short if I do at all. Because then, you know, this would have just been a retracement, took out the highs, you know, maybe just tried to retrace into this one more time. If we get down below this, we're now below the inversion. We're still below the first fair value gap. We've reacted off the 15-minute bearish breaker. We got back down below the new week opening gap, and there's this large wick, right? So a return back into that, offering, you know, all that price delivery would put my attention to the lows here. Right now, I'm just looking at this as like we're stuck in equilibrium consolidation. I observe anything from the 1 second all the way to the 12-month time frames. Just kind of depends on what I'm talking about, what I'm observing, you know, what the intention is on the analysis. Am I looking for quarterly adjustments? Am I looking for entries? What am I looking for? That pretty much determines what time frame I'm on. If I'm looking for entries, I generally frame from the 1 minute, 5 minute. Get my narrative and bias from daily, weekly, monthly, 1 hour to also coincide with those. But then when I'm in looking for executions, I'm looking for framework on the 1 minute, 5 minute framework, executing on the 30 or 15 second. Just to like limit the risk a little bit. It's pretty much the only reason why we would be navigating the seconds chart. At least that's my opinion. You know, but it's always framed from time frames a little bit above. Can you guys hear me okay? I got this stupid error message. Let me know if y'all can hear me okay. Really appreciate it. Yeah, if we go down to the 30-second here, now taking the stops here, price has now started a potential decline. Let's see how price behaves within this 15-minute fair value gap. So yeah, let's see what the other indices are doing. So yeah, the other indices are also given a nice rejection. Notice how they're all stuck. You know, they're all kind of back and forth. If we look at the bonds and yields, they're kind of also in a range as well. Yo, what's up, CJ? Man, it's been a while. It's been a while, brother. It's good to see you. Hope you've been doing well. Yeah, Hadai, I agree. I agree. Nothing's like just noise, I guess, but I mean, there is times when, you know, things can be a little bit more less favorable, you could say. And today has been a lot of consolidation, choppy, being held in a range, jerky movements, back to equilibrium, back to the middle of the new week opening gap. So again, we called this out as a potential opportunity. Because of the consolidation, I just decided not to take it. I did mention this fair value gap here as another possible thing to observe as a potential entry if it was going to deliver. And obviously that offered something. So depending on your perspective, depending on your model, depending on what your overall engagements are, like your process, that would obviously determine whether that was something worthwhile. If you just execute because someone says so and you don't consider what you're doing within your own process, you're doing yourself a disservice. You know what I mean? So definitely always keep that stuff in mind. But yeah, let's see how we're going to get back above or stay below this first presented fair value gap. Yeah, again, the best opportunity was based on this run higher, potentially setting up with this 15-minute bearish breaker. And then once it displaced, the secondary best opportunity was here, which again, we pointed those out ahead of time. But yeah. So yeah, DXY had a pretty strong slide lower. So yeah, just based on the fact that we're kind of just stuck, right? We're kind of just like hanging around. I'm going to just prefer to wait until the macro, at least 5 minutes before the macro. Maybe we could see some type of interest. Otherwise, you know, if we can't really find anything by the 8 o'clock hour, AM Pacific Standard Time, I will most likely put a ribbon on it, and we will be back on Sunday. Of course, in the Discord, I'll be keeping you guys updated. Yeah, let's see what's going to happen here. Coming back to this bearish breaker. Kind of a sloppy bearish breaker. Yeah, keep in mind this fair value gap. Okay, so if we overlap that with another giant fair value gap, if we get above that, that'll put my interest in this becoming a balanced price range, and then we'll end up potentially being able to see this high get violated, maybe even reach all the way up into here, because these have been tasty for the last couple of days. I've been saying these are suspect, you know. That's why even yesterday with my private community, I didn't want to take the short here because I wasn't sure if it was going to want to run back up there. It'll be very interesting to see it come up there now, right? After we've been kind of pointing that out, because it just shows like consolidation is so vicious at times. And you know, I'd be irresponsible to tell you that, hey, you know, you should be throwing in this and that. It's the best time to trade. Look at all these jerky moves. It'd be so irresponsible of me. Like, I refuse to burn my integrity just to call out an opportunity. Just it is what it is. But yeah, so this is kind of the area that I'm watching here. Again, we have this bearish breaker. This is also a bearish order block, these up candles. It's kind of interesting how PD arrays, as you observe them over time, a lot of stuff overlaps. This will be a bearish breaker here, but on the different time frame, it may have a bearish order block showing, right? Let's kind of take some of the annotations off a bit. So again, this is going to be very, very important for me to observe how it behaves here. DXY, I mean, obviously it looks like a mess. It's been kind of looking like a mess. But for what we're seeing here, price taking this low out, creating an overlapped fair value gap behavior here, I will assume that we're probably not done with the buy side delivery. I'll consider the equal highs that I mentioned earlier, but before that, we have this high. And again, overlapping this, depending on how it behaves, once it gets above that, it should act as a balanced price range and push price up. Narrative again, we still favor downside objectives. So see how that didn't get above it? See, there's if-then scenarios that we're waiting for. So we're waiting to see how this is going to behave here. You can make the argument as well, staying in line with the bearish narrative, that this run on stops, this delivery through this swing low here, if this does hold and doesn't break out of it, the sells stay valid. Breaking out of this is what changes my assumption. So we're going to have to just be patient and watch. You could maybe be aggressive and try to push that in to target the lows. I don't advise that. Okay. DXY is definitely a mess. And again, we're still in a 50-50 consolidation, still bouncing back and forth inside that new week opening gap ahead of the Fed chair, lunatic Powell. Okay. So there's a lot of anticipation for what's going to happen tomorrow, because it is going to send shock waves through the market. So be ready for insanity tomorrow. So yeah, I'm still interested in trying to see if we can get a short take place here. Very large wick. So let's see how this behaves. I don't like how wicky that is. I don't like how sideways we've been. So again, if I'm giving you advice as far as how I manage my money, I'm waiting. There's been so many times over the last 5-6 years. It's just conditions like this are ripe to rock your account and completely destroy your confidence in yourself. So I'm trying to be a positive influence, not a gambler influence, right? But as you can see, the breaker we've been pointing out stayed intact. Beautiful delivery. This obviously makes me confident, especially because we have dropped down here that sells are in fact going to continue to be favored. The red flags are obviously we're still in a bouncy consolidation, very jerky movements. DXY is out of correlation. The bonds and yields have kind of slowed up. Not really did much. They're also, they've been really hectic lately. And then, of course, we've got the currencies still kind of favoring buy side. Not really doing much, though. So, lots of messy relationships going on. So, yeah. So, if price can break through this wick here, the midpoint of that also becomes significant as a premium array. Then again, we also have this inversion fair value gap on the 15-minute that we're continuing to monitor. Notice how we're just stuck inside some of these areas. It's really not promoting the fact that it's interested in one side dramatically over the other. Now we're about to enter the 7:50 AM Pacific Standard Time macro. So if fireworks are going to take place in any capacity, they should take place within the next 20 minutes. So it's just run on stops. Seems like it's staying above this fair value gap for now, 15-minute. Whoops. So notice the level that I mentioned about this fair value gap, how I was talking about if it was to get above that, my attention would then move to the highs, because that overlapping effect creates balanced price ranges a lot of times. And then I would also be really contesting this bearish breaker, right? The validity of the bearish breaker. The bearish breaker, though, has kept its integrity. This fair value gap has kept its integrity in terms of holding for price going lower. So that being said, again, I'm not being swayed just because price ran up here. We can also, if this does end up breaking through the lows here, these three highs that have ran higher here, taking each other and then violently pushed through the sell side, this could potentially be, what does ICT call it? Like three something pattern. I forgot what the hell it was called, but it's a type of reversal pattern. And does anybody remember what he calls that when three highs get taken or three lows get taken? I forgot what he called that. It's like three something pattern. It's a reversal style pattern. If any of y'all remember what that was called, definitely leave it in the chat. Three drives pattern. That's what he calls it. So we'll see if that wants to act as a three drives pattern. Again, I still got the same assumption. Okay, my line in the sand for shorts being favored or not is going to be if we violate the highs up here. If it leaves this intact, we're still very much in line with price either not doing anything at all, which obviously is what we don't want to see, but it may happen because of the news tomorrow. But we also have the possibility of this remaining bearish and looking to seek the sell side down there. Again, I mapped this out as a potential market maker sell model because we see how this delivery is. A lot of times if it hangs around too much like this and just refuses to want to deliver, it may still deliver, right? It may still keep those elements intact. Ideally, this is just not what you want to see when you frame out a market maker buy or sell model. And this is all obviously occurring because of all the red flags we've mentioned today, right? The consolidation, the bouncing back and forth, the cracks in correlation, the ahead of the news event, geopolitical chaos flooding above all of us. It'll eventually clear up, right? And it's probably going to end up being good for the U.S. economy. But, for now, these are just things we have to consider for our risk protocols. And ever since we have seen all this chaos, I've told everybody to keep their risk minimal. Do not overtrade and over leverage ever. I don't care how long you've been trading. It's the death nail for anyone trying to be successful, because overtrading and over leveraging does not allow the numbers to kick in alignment. You know what I mean? It doesn't allow you to let the numbers do the heavy lifting, to let time do the heavy lifting, right? You hear that all the time. Overtrading and over leveraging removes that ability. It removes that opportunity for you to allow that to happen. So it doesn't matter how consistent you are. You can have 8 months, a year plus, and make a bunch of money. But one day that you overtrade and over leverage can delete all of it or most of it. And what does that do to your psychology? Trading in a market like this, when you take a loss and maybe you overtraded and over leverage, and you're sitting there and you're looking at the executions you took, questioning why you took that stuff in the first place, because they're just all over random because you fell on tilt. When if you just analyze the conditions, recognize the risk portfolio or the risk profile, I should say, and then just decided to either cut the risk, limit the amount of opportunities you took, or just do what I've done today and decide to just not take anything at all and be very demanding. And if it doesn't give you your demands, you do not take a trade. Okay. You guys that hop on these calls all the time, especially those in my private community, you see how many opportunities there are. Especially the last couple of weeks, we've been knocking out multiple back and forth trades, buying and selling throughout even this consolidation. Some days, some conditions do not promote that. I've called out 2 opportunities, kept a specific narrative that did end up being fruitful. The downtrend. I had some students call out buys, right? Some took buys. My friend and student, Mark, Bullfrog in the chat down there, and my little brother who's also watching. They called out buys. They said they took buys. Right? The independent thinking is amazing. But again, there's ways to frame out multiple different scenarios. But again, sometimes things are just not going to allow you to participate. Sometimes you're going to be the reason that you don't participate because you're following your rules. And at the end of the day, if that's why you didn't take a trade because you're following your rules, who's to say that that's a loss? Who's to say that that's something you should beat yourself up about and think that you supposedly missed something, right? There's people that have blown their accounts today because they don't listen to good advice, or maybe they just don't have people giving them this type of advice. A lot of times people don't want to hear this type of stuff because it's not, give me an entry, sir. Okay. Those same people are going to reset their account 5 times this week. You know what I mean? And it's heartbreaking. It really is, because it's the mindset, that's something that someone can't change in you. It's something that you have to see a different perspective on and then make those adjustments on your own. We all have those issues, those mistakes, those ups and downs we got to deal with, and perspectives that need adjustment. But again, at the end of the day, it's up to us to take good advice, and make sure that we can equip ourselves with this type of information in terms of conditional awareness. Because if you took a trade in here or over leveraged and over traded, and you've been hearing what I've been saying, imagine how much it probably hurts even more. Knowing that someone was mentioning it to you, you're aware of these specific things that are taking place and being told to you, yet you went against them and got the exact result that this advice is trying to prevent you from having to deal with. Just imagine, again, you're going to have the pain of regret or the pain of discipline. And you got to pick one. You can't have both. If you try to mix both of them, the pain of regret is going to be much more heavy weighted than the pain of discipline. You can't really have both, because a lot of times not being disciplined leads you to regret. Not being disciplined a lot of times leads you to blowing your account. And then again, not being disciplined, not having rules and organized processes you can follow, it also leads to you making those mistakes that removes the opportunity for compound interest to take place, for the numbers to work themselves out, for you to even gauge whether your model is effective for you or not. If you're not disciplined to follow the rules, you can't gauge whether a model works for you or not. If you're using 500 different perspectives and journaling those 500 perspectives, for one, it's probably a lot of work, a lot more work than you need to be doing. But it's also giving you inaccurate data. Like how are you supposed to gauge whether the 2022 model works for you if you're trying to trade order blocks, breakers, turtle soup, optimal trade entry, all these different things at once? How are you going to gauge whether one thing works over another? This is an issue many people deal with. All these things we talked about in the last 20 minutes, they're things that everybody has to confront at some point. And how you overcome those things is very important long term. And then of course, like I said about the models, you need to pick one model. Like I said earlier, this is a breaker, right, on this time frame, and 2-minute time frame, and a 3-minute time frame, 4-minute time frame. But the further you go up, it's an order block on one of the upper time frames, right? So you could be trading a breaker, not realize that it's also an order block, right? So those two different models, using a breaker or an order block for your model for entry, they overlap. Most of the time, a lot of the models bring you to a very similar end, okay? So that's why you don't need to worry about trying to trade all these different models at once. Eventually, when you get more seasoned, you're going to realize which models will mesh well with your baseline model. Like me, I trade market maker buy and sell models for frameworks and, sometimes for entry based on the phases. I use breakers that meshes well with market maker buy and sell models. I use the YouTube model 2022 that meshes well with every model, right? For breakers, it sometimes gives you the earlier entry. Then I use continuation variations of each of those, which I talk about here on the YouTube channel, very much in depth in my private community. I mix in institutional order flow entry drill because that meshes well with all the others. And then, framework wise, I also use Power 3. Power 3 meshes very, very accurately and well with market maker buy and sell models, right? So you can see it. Things align with each other a lot of times. But the only way that you can realize that is by obviously gaining more experience and having a baseline. If you don't have a baseline, I mean, a lot of the stuff is more difficult than it needs to be. You know what I mean? So definitely consider some of these things. Obviously, this topic of in question is like, it's not entry related and all that, but it's some of the more important things that will make you more effective and more knowledgeable and wise as a trader. Because things outside of trading are a lot of times more important than where the entry's at. Where's the signal, sir? like give me the next trade. That doesn't help anybody. Unless you're trying to build muscle memory for a model, right? But a lot of you guys probably trade different models. Maybe we trade a very similar model, which obviously will be helpful. But a lot of the stuff we talk about it's like they're umbrella concepts. Like for bias and narrative, like that works for all models. Who cares? Like what model you use for entry on the lower time frame. Validation and invalidation principles, that works for every model. Continuation variations that I talk about works for almost every model, right? High resistance, low resistance, low probability, high probability conditions. I mean, that's kind of like a non-negotiable, unchanging type of concept, right? Like a lot of the same things will be taking place overall. It doesn't matter what model you operate within that. The things that you apply, no matter who, you don't even got to trade ICT concepts, right? Like you could use other things, but still be able to use some elements of smart money concepts to amplify whatever it is that you choose to operate within. So yeah, all this stuff is extremely important. As we've been talking about throughout the morning, price is now at a moment where it's doing what ICT calls time distortion. So if you took any opportunities in here, you most likely got stopped out and probably had a hard time. Probably had a really, really hard time. And I pray that none of you guys went in here not taking my advice and overtraded and overleveraged on either direction, because nobody is able to profit right now. Unless you got a swing trade on that's like, 100 handles. Right, but even that may be a little under fire. Maybe not. Right? But who the hell wants to put a 100 handle stop loss? Right? Like, this ain't a condition to swing trade in right now. When it opens up, maybe. Maybe in my private community I'll talk about different ways of trading. Like how to use all these concepts the same way we use them in the lower time frame on the higher time frame. But yeah, you guys, so given the fact that, we're kind of now stuck, we have talked about a lot. I hope that you guys have been able to take a lot of the stuff that we talked about so far today and took some of the experiences we've talked about and different concepts we've looked at today and can apply them. Again, if you guys ever have any questions, hit me up on Instagram on my DMs. You can hit me up in the comments, the chats, hop on the live calls regularly. I'm more than happy to help you guys. I do have a free Discord and a paid Discord, depending on, what your needs are. You can go check some of that out. And of course, again, if you guys haven't subscribed to the video or like the video and subscribe to the channel, but you get value from this content, definitely don't forget to go do that. I always forget when I'm watching videos to like the videos. So I just thought I'd remind you guys. And if you have any friends that you think can add to the conversation, or if you think they can gain value from the concepts and stuff we talk about here, definitely, send them a link, invite them. And I want this community to be a tight-knit community. Even though it may get big, it may not get big. It doesn't really matter to me. But I just want to help. And if you guys have anyone that needs help, definitely send them my way. Or again, if they can provide value, that's also very much a powerful thing too. So yeah, I appreciate your guys' time. Thank you for spending time with me. For those of you that do just hop on the YouTube videos, I will see you guys on Sunday. And for my private community, I will see y'all bright and early tomorrow, as always, as well. So thanks again, you guys. God bless. I hope you guys stay safe the rest of the week, and I will talk to y'all next time.